InvestorIdeas.com podcast.
Good afternoon and welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, I'm going to be looking at a few public company announcements from HEXO Corp, trading on the NASDAQ and the TSX as HEXO, the Green Organic Dutchman Holdings Limited, trading on the CSE as TGOD and the OTC as TGOD-F, RIV Capital Incorporated, trading on the CSE as RIV and the OTC as CNPOF, as well as Halo Collective Incorporated, trading on the NEO as Halo and the OTCQB as HCAND. So first today, starting with Halo Collective, who announced the completion of its previously announced share purchase transaction of HCAND Corp. This transaction creates two compelling standalone entities, Halo, which will remain focused on adult use cannabis in North America, and HCAND, focused on medical cannabis for international markets, said Kiran Sidhu, Chief Executive Officer of Halo. Now, the separation provides each business with the flexibility to pursue its unique strategy and optimize its own capital structure, which we believe will lead to long-term success and value creation. And this also significantly reduces Halo's overhead spend by approximately $9.6 million annually, as HCAND intends to be self-funding and takes the company one step closer towards profitability. Now, today marks a major step in HCAND's establishment as an international medical cannabis company with the goal of helping patients around the world lead better lives, commented Tej Verk, CEO and director of HCAND. As a separate entity forging our own path from Halo, HCAND has the right focus, structure, and resources to fulfill our mission. And at our GACP-certified Buffalo campus in Lesotho, we're leveraging the country's ideal growing conditions and exceptional talent pool to produce medical cannabis that we believe will be of the highest quality at an extremely competitive cost. Now, we're set up to reach international markets through multiple channels, including through CanMart, our licensed UK-based importer and distributor, through Cantorage, one of Europe's leading EU GMP providers of medical cannabis, which we have an established distribution agreement, as well as through other progressive parts of the supply chain that we're actively working to build. And we believe that we now have one of the industry's best platforms to gain market share and win in the rapid growing international cannabis market. Now, immediately following the completion of the transaction, Halo owns approximately 68.3% of the issued and outstanding shares of HCAND. So I've talked about their HCAND Corp in the past, again, based out of Lesotho and focusing on international markets. Again, when I'm looking at long-term globalization of the cannabis industry, Africa as well as South America and Israel tend to be the main sort of players right now as far as potentially massive amounts of import and export opportunities coming out of those areas, as they can have much better grow conditions. They have a lot of backgrounds and talent pool that has already had cannabis backgrounds, especially in Israel and especially in South America. Not as much in Africa, but definitely it still is there. And I do think that, again, just because of the price of production that you can go from those countries, for the medical market, that could be very beneficial when you're looking at second generation products, extracts, edibles, etc., or just the oil itself. So I do think that those companies will become bigger players as this industry continues to get more and more global. And then also for Halo Collective now, this just gives them a little less stress, and hopefully you can see HCAND Corp kind of build itself out over the next couple of years. The company also announced that it's entered into a share exchange agreement to acquire all the issued and outstanding shares of Simply Sweet Gummy Limited, which is a health-conscious, low-sugar cannabis-infused alternative confectionery company based in Vancouver, BC. And the acquisition is expected to be complement Halo's strategy to introduce higher-margin proprietary products in one of the fastest-growing parts of the cannabis market, edibles. Simply Sweet has a portfolio of 5 proprietary formulations made from natural ingredients that are healthy, vegan, low sugar, and free from sugar alcohols. And these include Blueberry Buzz, Peach Dream, Watermelon Adventure, Sour Cherry Blast, and Strawberry Chill. Simply Sweet is right in the sweet spot of two major consumer trends. Low sugar sweets is the fastest growing segment in the confectionery market, and edibles is the fastest growing in the cannabis market, said Kiran Sidhu, Chief Executive Officer of Halo. Adding Simply Sweet to Halo's portfolio makes Halo an early mover in what we expect to be a rapidly growing space, and we intend to strengthen our position in our California and Oregon markets by using Simply Sweet-based formulations for most of our infused gummy and candy production. So again, sort of releasing the reins a little bit on HCAND and now acquiring Simply Sweet gummies. I wouldn't really say that this gummy company stands out in any considerable way. There are dozens of gummy and edible companies that are low to no sugar, vegan friendly, gluten free, etc. There's a lot of different brands out there. Many of them are private. You're just seeing more and more of them get bought up by public companies. I expect that to continue to be the case probably for another year or two, at least at the current rate that it's kind of going. just because in general, those are just expertise from people with a actual baking or confectionery background who have also worked with cannabis for a long time, that realistically large-scale companies aren't going to be able to compete with. They're not going to be able to get the talent pool. They're not going to be able to get the product knowledge, and they're not going to be able to do it at scale. So I do think that this will be a continued trend when we've looked at edibles for most of the large-scale producers or even just bigger companies in cannabis. Most of them are having a small in-house brand or series of small in-house brands to complement their edibles market. And I think that'll still be the case for quite some time, honestly, until this industry is allowed to go into the restaurant industry in some fashion. When there's the ability for consumption restaurants in the future, I think you'll start to see that change. Then you'll see more people coming from the culinary background jumping into this space, and then you might see more of a scaled out version. But for now, again, it'll definitely be more and more of these brands. I'm sure they'll sell well, but I don't think necessarily that they're have any sort of competitive edge by being low sugar or gluten-free or vegan. That's more of a standard as opposed to a bonus. Next, looking at Riv Capital Incorporated, who will report its financial results for the quarter ended September 30th before markets open on Thursday, November 18th. The company's unaudited, condensed interim consolidated financial statements and management discussions and analysis for the 3 and 6 months ended September 30th of this year will be available on the company's profile on cedar.com and at rivcapital.com/investors. And following the release of the Quarter 2 2022 financial results, Riv Capital will host a conference call and audio webcast with Narbe Alexandrian. If you haven't listened to our most recent interview with Narbe Alexandrian, definitely something worth checking out. As well, he does talk a little bit about these, what to expect for these results, and what is kind of coming up for the company for the rest of the year. And the link is attached in the article, or you can simply just look up Investor Ideas Narbe Alexandrian interview. We've interviewed him several times, but the most recent one was just a few weeks ago. So he did talk about kind of where the company's at right now and what to expect with their financials to some degree. Looking next at the Green Organic Dutchman Holdings Limited, who announced that it's entered into a definitive agreement with Acosta Canada Corporation for exclusive and dedicated sales representation of TGOD's adult recreational cannabis brands in key provinces across Canada. Now, the company made the strategic decision to move away from a syndicated sales model in order to enable scaled growth with a dedicated sales force through greater product education, market penetration, and distribution for its TGOD, Highly Dutch Organic, and Ripple brand portfolios in the key markets of BC, Alberta, Saskatchewan, Manitoba, Ontario, and Newfoundland. With the dedicated sales representation in key markets, we are confident that we will see stronger product distribution at the retail level, enabling greater focus, control, and flexibility for increasing awareness, imparting product knowledge and bud tender training, and influencing consumer sales transactions with our retail channel partners, commented Gail Duncan, TGOD's Chief Growth Officer. Now, Acosta is a proven sales resource behind the most recognized leading brands which they represent to the top retailers across Canada and the U.S., and by leveraging their significant expertise in recruiting, training, and managing a dedicated force, we will optimize our engagement with retail bud tenders and store managers, provide increased sales, merchandising, and market supporting, and simply bringing better value to them with minimal disruption to their operations, added Duncan. TGOD is now using Acosta Canada Corporation to try to bump up their sales. I'm always rooting for TGOD. I think that them as a concept of a company focusing on organic is very long-term for the cannabis industry. I think it's a smart play. I think they've made a lot of interesting decisions. I think they're going to continue to struggle, though, when it looks at their sales. Again, they're just aiming for a certain margin category as far as price and quality of product that doesn't exist. They are trying to oversell the importance of their organic product, and if they can't produce it at the right cost levels, then they should just look at different types of product. I think that in general, this type of strategy of, no offense to Acosta Canada Corporation, but I think that's going to be a huge fucking waste of time. Mainly because, unfortunately, in the cannabis industry today, there's still very little influence when it comes to actual sales decisions from customers. Yes, you can convince someone maybe one time to buy a product and strictly on you're trying to pump this product, but if they go home and smoke that product and aren't happy with it, they're not fucking buying it again. And that's just real. That's just where the retail industry is, especially in Canada today, and even in the US, is that this product is deciding what is sold. It is strictly about quality of product and cost. Those are the only two factors at play here. There's branding, doesn't matter at all. Marketing doesn't matter at all. The types of weird, marketing tools that would normally apply with other industries just do not apply to the cannabis industry at the moment. It is entirely about the desired results and the cost. If you can produce really, really, really high quality product, you can sell it for high prices, and because it's so good, people will continue to buy it. You don't need to do anything. If you're trying to sell mid-level product, it has to be at mid-level prices, and if you want to be competitive, it should be at lower prices, or it needs to be of a higher caliber quality. And no offense to TGOD's product, but they're very mid-category in almost all the categories that they're in. And I think that is probably the toughest category to compete in right now. Again, I've talked about the success of companies like Pure Sun Farms, who focused on bulk sales products right out of the gate. They've done really, really well. I've talked about companies like HCAND, who focused on their pre-rolls in different formats. Again, that became an adoption that almost every company has had to go to now, is those little 10 packs. Talked about, again, the premium extracts market, and that is real right now. In BC, there are many people who are actually switching from the illicit market to the recreational market due to quality. The reason that they're going to the recreational market is because right now there is live rosin, there are diamonds, there are shatter and extract products that are way better than what you can get from the illicit market, and that just comes down to the facilities they have at their disposal. Obviously, a person who's doing something out of a garage or out of a more sketchy facility and doesn't have access to investor funding and capital in the same way that one of these public companies can, or even a private company can within this space, within the legal market, they're just not able to compete with the caliber of quality that can be produced from the recreational market at the moment when you're looking at extracts. And because of this, you're seeing that the price of illicit extracts is skyrocketing downwards because people can't unload this shit fast enough. And nobody really cares about the price now. It's a price gouge game for the illicit market. And for the recreational market, people are actually really competitive with pricing now towards the illicit market, and they're producing much higher quality products. So I would love to say that this Acosta Canada Corporation will do really anything, but I think all it will do is give them some slight exposure. But if the product quality isn't there, it's going to do nothing. And I don't think that TGOD's issue so far has been it's not in enough markets, people don't know about it. I think the issue has been the price doesn't always match the quality, and they're trying to promote something as this is certified organic, which not enough people do care about in this industry right now. And also there's not enough of a difference between that and a small cultivator. So there are many small niche cultivators within the industry who are organic. They are just not certified organic. And most people now no longer care about the difference of certified versus just actually organic because of how much they've been swindled within the food industry of many certified organic products, which actually did not have many organic principles behind them versus uncertified organic products from your local farmer or local market person, which are legitimately organic in many traditional senses of the word, but don't have the certification behind it. So again, this is my opinion on that strategy. Is it's a bad one, and I don't think it will reflect massive sales growth for TGOD, but hopefully at some point them having just consistently good organic product will get them a little bit better recognized. And it will translate to that company having a little bit more of a market share. Speaking of market share, more and more consumers are moving away from traditional puff pass joints and instead are optioned for personalized pre-rolls, which now make up 1/3 of the total sales. Now, Redecan, who I already mentioned, part of the HEXO Corporation family, continues to pioneer the category with an introduction of the King Pack. This is the type of innovation that a company like the Green & Grant Dutchman could actually benefit from and would get them more attention, which would be this King Pack, which contains a full ounce of 28 grams of Redecan's best-selling strain, Wappa, and has 70.4 gram pre-rolls, which satisfies consumers' insatiable appetite for larger pack size across all formats. Now, in addition to the King Pack, Redecan is upsizing already strains to 0.4 gram packing in more bud for an enhanced experience with a slower burn at the same great price consumers have come to know. So new fan favorites such as Black Cherry Punch, Lilac Diesel will join the lineup of Readies available in Ontario. And just in time for the holiday season, Redecan introduced its limited edition Wrapped and Ready Readies in their Blueberry OG strain. And these Readies are wrapped in a holiday spirit and are available in 3 different colored boxes. Only what quality is the last. So I think that strategy of branding and marketing is extremely smart. Again, having the King Pack, especially for the holiday season, where you could get someone again, there's going to be a lot of people who are going to get weed or weed-related products for stocking stuffers this year. That's going to continue to be a trend of gift giving, just like alcohol has been one of the main gifts in the past. I do think weed is going to start taking up a bigger and bigger share of that. Options like this King Pack, where you can give someone a full ounce of pre-rolls ready to go. So if they were having a Christmas party or a bunch of people over, that is a perfect option to have for any sort of social setting, or again, as a stocking stuffer. Having the branded sort of Christmas themed wrapped readies as well is another great stocking stuffer idea, or at least going to promote people to, these are going to be great little knick-knack gifts. So I do think that type of strategy is where these companies should be heading towards. Again, focusing on marketing, on branding, on having sales reps, I think is a delusional idea in the cannabis industry today. And I've seen very little actual translation to sales from a lot of the supposed legwork that many of these brand reps have done. I don't think it's really actually translating in any sort of consumer ways, or at least in any sort of meaningful ways. And the same would go with packaging. I think you could focus on completely bullshit, nondescript packaging as long as you're offering good product. And that continues to sort of be the case, is that the product is what is key to this industry. It is a strictly by consumer industry at the moment, and it will continue to be until there are all the different advertising and marketing opportunities allowed that exist in other industries like alcohol. Lastly today, through a strategic collaboration, BDSA, Deloitte Canada, and Hi-Fire Incorporated, which is a technology subsidiary of Fire and Flower Holdings Corporation, trading on the TSX as FAF and the OTCQX as FFLWF, they revealed a new in-depth cannabis pricing report entitled Price. It's complicated: how cannabis pricing differs from other consumer goods. So if you've been wondering where I've been getting some of these insights into what I think is going on in the industry, this report is really fantastic. There's a link attached in the article where you can go and see what specifically they go into, and there's a much more detailed report. Again, those three companies combined have a shit ton of data on the cannabis industry. Over the last several years, the medical and adult use cannabis markets have seen rapid expansion across North America, and the latest report from BDSA, Deloitte Canada, and Hi-Fire unveils new consumer survey data alongside proprietary market and sales data, providing insights into the pricing dynamics of the legal cannabis markets in both Canada and the U.S. Legal cannabis sales in Canada and the U.S. are growing rapidly, and in speaking with our consumers and customers examining the data, pricing is consistently indicated as a primary factor in purchasing decisions, said Matthew Hollingstead, President of Hi-Fire and Chief Innovation Officer of Fire and Flower. Now, as existing markets mature and new markets come online, cannabis pricing is expected to remain extremely volatile, and through there are some similarities and trends to traditional CPG markets, like consumers willing to pay a premium price for superior products or services. Now, as the market continues to expand, understanding the role of pricing will be imperative to maximizing potential for brands and retailers, said Kelly Nielsen, the Vice President of Insights and Analytics at BDSA. Market growth brings opportunity, and we continue to see more brands and products entering the market. At the same time, though, consumers, manufacturers, and retailers are getting more sophisticated, and in order to be competitive, it's important to understand how pricing plays a role in the decision-making process and how pricing and products benefit can be leveraged to maximize potential. So again, there's a very in-depth report, but it does talk about some of the things I've already talked about today, which is, again, that when you're looking at the mid-price category, really, really, really tough to stand out. It's really, really tough to have any sort of long-term traction. Looking at lower-priced pre-rolls, looking at lower-priced bulk format product, there's a lot of movement, there's a lot of heavy competition, but some people are striving ahead, and again, because they focused on price and quality. Those two things are basically the only deciders within this industry at the moment. What's your price? What's your quality? Everything else is complete nonsense that, again, I know a lot of companies are wasting money on this and saying that it matters a lot. It is not translating. And again, this BDSA, Deloitte Canada, and Hi-Fi report pretty much supports that same concept, which is that, you can focus on packaging all day long. You can focus on extremely cool marketing names and brand names and all of that. It is not going to translate to sales or any sort of market traction unless you're focusing on pricing, unless you're aware of the competitive pricing of your product, and unless you're not bullshitting yourself about what quality level your product is at. A lot of the problems of these companies is that they're run by people who don't smoke their own product a lot of the time. With the extracts industry, you're seeing that a lot of these people love extracts, and they are the number one buyers of their own product, hence why their product quality is extremely real. And when they say this costs this much and it's this product quality, they're not lying, because they've tried other product and compared it and made a realistic assessment of their own inventory. Whereas when you're looking at a lot of the flower that's going out there, it's coming from people who are just bulk producing it. They do not smoke it themselves. They are not cannabis connoisseurs in any sort of sense. And they don't say or understand what separates them from some of the competitors, because they're not out there smoking all the competitive flower and seeing what the hell is actually going on and where they do stand in real competition when it comes to price and quality. So again, if you want to know more about how much price and quality do impact the cannabis industry, I highly recommend clicking the link attached in the article and looking at that BDSA, Deloitte Canada, and Hi-Fi report. That's all for today's podcast. Enjoy the rest of your day. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.